Hello and welcome to another episode of the Investor Financing Podcast. Today I am ultra excited because we're going to talk about fundability for your business and you as a person. We're actually going to talk about the other side of financing, not the real estate, the hard money loans. We're going to talk about the other piece that you need to be doing to build your credit profile, both for yourself and your business. Please welcome Merrill Chandler to the show. He's been in the credit industry since 1997. He's going to talk to us about Getting Fundable. He's going to talk to us about his boot camp that I'm actually got a ticket for, and I'm going to because I am going to build more credit. I've got a decent amount of credit. I've studied a little bit, and why I was so excited is because I know there's so much I don't know in this space, and I know if I can get these unsecured bank lines of credit, large bank LLC credit cards, right? Not in my personal name, maybe a combination of building some additional personal lines of credit as well. And then I have all these lending resources for the real estate. I can grow a lot quicker by doing this. And then I'm going to learn all the secrets so I don't go in and waste time and get declined. And then I get too many inquiries and then it's like a vicious cycle. Then I can't apply for credit and I don't know the secret sauce, and that's why I'm going to the boot camp. But please welcome to the show, Merrill Chandler. Thanks for joining us.
Thank you so much. I have nothing else to say. You just literally laid out the whole point of why fundability is perfect for personal and business borrowing, right? So thank you. I'm thrilled to be here. Real estate investors are my sweet spot because your listeners would know what to do with $100,000 write a check and do a deal credit instrument, right? They know what to do with it. So here we go.
Yeah, no, that's great. And it's like, I've studied enough where I was somewhat successful with some credit so far in my LLCs, corporations, but I'm doing it completely wrong. I know I am. And I know that I could like supercharge that. Now I want to go from, I might have, I don't know, like 200,000 in my different LLCs of available credit, but I want to bring that up to 500,000 and 600,000. I think I can by following. I'm going to learn from at your boot camp. I'm going to learn like the whole secret sauce, which is going to help me do this, and then I will be ready when the opportunities in real estate present themselves. Or if I want to buy a business, I'm looking at some business acquisition as well. I want to have these available credit lines, and that's what you do. That's why I was so excited. That's why I personally reached out to you. I'm like, I got to get you on my show because we don't talk about this enough. And this is really like the golden rule. I'll give you a horror story. I went to this company years back, and they got me a bunch of credit, right? They got me a bunch of credit cards. None of them were business credit cards. Got them all in my name. Personal. And I needed the money. So what did I do? I was rehabbing a bunch of houses. I charged up all the credit, used my utilization. What happened? My score went from 720 to 570. And I've never missed a payment in the last 10, 12, whatever years. And I was stuck, right? Now I'm like, well, get more credit. Well, you can't get credit now because, so I did things completely. Yeah. So many people do it wrong and they get in this position and it's like, we want to avoid this. Guys, if you're listening to this right now, don't make the same mistake I did a couple years back because it was not fun to dig myself out of that hole because we need credit. We need credit. That's how we grow. We need other people's money. And if we can get bank lines of credit, it's going to be a lot cheaper than hard money. So that's why we're here today. So Merrill, kind of walk us back and just tell us how you got in the industry. And
absolutely. Actually, it's a fascinating story. In 1992, I co-founded Lexington Law Firm, which is the largest credit repair law firm in the country. Straight up, the tens of thousands of new clients every month. It's a behemoth. But when I was in the 5 years that I was there, I learned that credit repair doesn't make you fundable. So we even coined the phrase fundable, right? Because you want to make sure that you're fitting what lenders need and deleting a few negative items from a credit report. I was finding we were getting mad success at deletions and little success for getting our clients the mortgages, the homes, the cars, the things that they need, especially business credit, right? True bank business credit cards, business loans, business lines of credit. And so I forged out, I took it to my partners. I said, dude, we got to do this, man. This is next level. Clean their credit as much as we can, and then optimize and build fundable profiles. And they're like, no, dude, we're making so much damn money. Why ruin a good thing? And so I left and started the Get Fundable the fundability movement, and we've never looked back. We've done over $200 million in fundings in the last 5 years since we started keeping records, and it has been an amazing journey, because the thing most people have learned, the greatest myth, the greatest misunderstanding in credit, is that people believe that their credit score matters for approvals. So let me walk back from that statement. Do you realize that your credit score isn't even considered until after you're approved? Beau, nobody looks at your score until you're approved. Then they look at your score for rate, term, and how much to risk. It's a risk assessment scoring model, right? So do they give you $5,000 or do they give you 50 or 100? So your score only matters once you hit these approvals. Well, guess what the approvals are? The approvals are based on your performance data, which we call borrower behaviors. Beau, there are 40 borrower behaviors that are being measured behind your back that nobody knows about. And so while we're chasing this little shiny object called a credit score, I got an 810. I'll bet you more zillions of your listeners have 800 plus credit scores. And they're like, why can't I get a damn business line of credit? Why can't I get a $100,000 business loan? Because we think the score is driving the lending decision, and it's not. That is the greatest myth busting. I have entire social media campaigns about that one misunderstanding, misrepresentation in the credit system.
Got it. Yeah, that is eye-opening for me as well.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Hi, this is Beau Eckstein, host of the Investor Financing Podcast. I appreciate you checking out our channel. On this podcast, we talk about real estate, investing, financing, business lending, and acquiring and expanding your business. I'm sure you will find some videos here that will help you build your business empire. There's a lot to see. Take your time and make sure you comment, like, and subscribe. Thanks again.
So let's kind of just talk about like a high level. We're not going to get in the weeds. We don't have time. If you're listening and you find this interesting, just go to the boot camp. It's that simple. But we're going to talk high level, intrigue you if you're interested in this realm of business credit and building your personal credit history the correct way. But can you kind of like talk to me? Let's just say I'm a new customer. And I set up a discovery call or whatever we want to call it with your team. And, I have several LLCs, a corporation, etc. They're probably not, like, the addresses aren't right. Like, do you start first by looking at an entity? Like, if I have an existing business, do you suggest using what I have already or starting from scratch, or what's usually the process?
So this is the highest level, and I'm speaking out of context, but this is the highest possible strategic level. Since 2008, lenders stopped lending to businesses and started lending to the owners of the business and then putting the money into the business. It was all full doc, everything's full doc. So they're trying to vet each business. But in 2008, just like in mortgages, massive fails. SBA failed, their portfolio failed, everything was horrible. And they're like, we need to do this differently. And then what they found is that these borrower behaviors that people are being measured on for personal credit also work. It basically indicates what are the attitudes that the principal of the business, the owner of the business has. So they started shaping to fund you, Beau, as the owner of the business, and then just drop the money in the checking account of the business when it's approved. Now, it's 80-20, 80% of the decision is based on your personal profile and all those borrower behaviors. So think of it this way. They want to lend to the strategist, to the genius in the business. They want to lend to the genius in the business, not to the business itself. So we have to build a corporate structure. We create, it could be one of your current businesses. We create what we call a fundable entity, a qualified fundable entity. And then all of your tactical implementation, the flipping, the holding, the rentals, the cold fusion technology, whatever you're into, those are client companies. And so we create a relationship, very simple, very easy to do. We discuss it 100% in the bootcamp. Easy to do, but we establish you as a fundable entity and that you are transparent to the banks. You can't hide behind a New Mexico, Wyoming, or Delaware or Nevada company where you're hiding the owner, because they're lending to you through the business, right? They lend to you. And so the highest possible level is we suss out, we take an inventory, whatever entities you have, qualify one of them, make it hit all of the funding check boxes that the software needs to approve you. Boom. Then here's the amazing thing. You borrow in this entity and you fund your deals. The bank doesn't fund your deals. That fundable entity does.
Got it. So if I'm hearing you correct, we would build one of, even if I have multiple, you look for like the best of the best out of the LLCs or corporations that I have. What makes the most sense, age, seasoning profile, that becomes the main kind of operating company per se for being fundable. And then that we grow that to the extreme that you can grow it. And then obviously there's probably like initial round of funding you go for, and then, maybe seasoning for 6, 12, 18 months. Then there's a strategic way of growing that even bigger. When would you start building another credit profile, or does it make sense to you just probably?
Here's what's amazing. Since they're lending to you, very perceptive question. Since they're lending to you, you only need one QFE. The amount of money you can borrow is based on the number of banks who want to lend to you in credit lines or business loans to the tune of 50 or 100 grand each. I have one client, $3.6 million in bank loans and lines of credit. Many of our clients the sweet spot is that 300,000 to 500,000, but you can grow to more based on the number of banks in your area that you can work with. You got to have a fundable entity, but once you have it, you are backstopping these. It's all personally guaranteed. There are no personal non-PGs, right? They're all personally guaranteed. But every bank relationship that you build can go up to $100,000 or more for each bank.
And that's typically app only, meaning if I'm running losses because my real estate holdings are, I don't want to, obviously if you have real estate, a lot of times these people show zero or losses. And so that doesn't matter if we're staying under these thresholds of 100, 150 grand.
Well, right now, yes, every one of the banks that we would refer your listeners to have unsecured stated income models, funding models. Some of those limits have dropped because of COVID and right now the interest rates. But it's all about relationship building. Once you're in that bank and you start running what we call traffic models on these credit lines, and you do it right, their underwriting software says, give them more money, give them more money. So it doesn't matter if we get a 20 or a 30 or a 50, they're all going to go to 100. And it doesn't matter to the bank that there's high interest rates, or because you're already in the family, you're a proven known entity. And so it's all about that internal performance data that they can measure. We know what that is. And my relationship with FICO, in 2 weeks, I'm going to FICO World for my 4th time. Think of Mount Olympus of the credit and funding gods, right? That's where I'm going to learn what is going on for the next 12 to 24 months in business funding. All the lenders, all of the underwriters, everybody's there, and we're talking shop about how they protect their money, which means to me, how do we qualify for the money? right? Because I'm looking from the borrower perspective. But this entity is designed to, you can scale, but you only want one QFE because you're the one backstopping it. So Wells Fargo is only going to give you 100 grand, but then there's PNC and BB&T, and then and there's Truist, and you just start expanding those models. But you can't go to Wells Fargo under one business and under another business because you're the one they're lending to. That make sense?
Yeah. The majority of my are with Wells Fargo right now.
Yeah.
So, but yeah, so this is really good. This is really interesting. And then there's a certain algorithm that we're going to utilize these lines of credit, pay them back, utilize them. And there's kind of like a monthly plan for the first 6 or 12 months. This is the most you should be utilizing. This is how fast you want to repay it back. You want to build that profile. And now these relationships with these different banks, is there going to be, do we go to like a local, or do you have like points of contact in your program where we actually have certain,
There's a body of banks that are our first preference, right? But depending on where you are, if some of those banks aren't available, because all the big footprints don't cover the entire United States, right? So we help you vet or provide all the vetting questions, so that because there's a done for you service, there's a done for yourself. But after the boot camp, we don't even talk about coaching until you know what you want and how you want to get there, right? But that's what the boot camp is all about. And so we will help you get the right banks and vet them so that you're not wasting your time walking to a bank that isn't going to work with you down the road.
And there's probably a formula, because you don't want to apply to too many at one time. I'm guessing there's a sequence here, like, this week you got 2 banks, you got to wait 3 months, whatever the formula is. But I get the point.
There is a formula and we also know how to work. Yeah, that we could go. Well, I could go for 2 days. That's weird, because that's how long the boot camp is. So yes, there is a lot of amazing technology behind this that I've been taught by FICO and by the lenders. Lenders want us to curate qualified borrowers for them. So they share their underwriting models so that we know what a borrower needs to look like to get approved. It's straight inside information.
Yeah, no, this is golden. I mean, why wouldn't anybody, unless you have a boatload of cash, which most of us probably don't have a boatload sitting in our bank right now. But when you do have reserves, is there strategies too, like when you do have money sitting around, to run it through these banks so they're like, whoa, this person's got 300 grand in the account here. Let's lend them more money.
Yep, you nailed it. So I rarely encourage individuals to use their own money for deals. I want to leverage other people's money, but the way you use it is similar to what you just said. We want to show a relationship building is best done with either money or time. So the more money you have, the less time it takes to have a great relationship with a lender. But even if you don't have a lot of money, it just takes more time. But they still love the relationship because you're showing consistency over 6 months, 12 months or more, right? So, but we can get down, depending on how much money you put in that. Imagine getting $100,000 line of credit because you put in even as little as $40,000 into account, but used it the right way in order to trigger their underwriting guidelines. More of this in the bootcamp, and a whole strategy in the bootcamp. But imagine triggering the software that says, oh, this borrower is a person of interest. Branch manager, here's an email to go talk to that person and get them a credit line or a business loan. That's what's going on behind the scenes. That's what we do to shape your borrower behaviors to make that approval possible.
Yeah, it's interesting. I opened another Wells Fargo account a couple of weeks back, and I think I've hit my threshold, because they usually offer me like a $20,000 business line of credit, and I didn't get it on the last entity, but I've gotten a lot prior to that with different, I have 8 accounts with them. So that's probably, I hit a threshold with whatever their algorithms are.
Yep.
And so this is what the boot camp's all about, is
All about.
how to go and do the credit. It's a credit dance. You got to be a good.
Well, that's the seduction. We want lifetime relationships with these banks, but it all starts out with the dance. It starts out with dating. We imagine speaking a lender's love language that think of it. SEAL Team 6, they don't take anybody off the street, right? You got to prove up. But when you do, you are the best of the freaking best. The NBA, owners don't let anybody on the court. That you got to prove up. But the season salaries, season over season, are like this if you're the bomb, right? Same with lenders. You prove up, more money, lower rates. Think of it this way. Lenders treat us like prey until we look like a partner. Then they'll partner with us. And those are the long-term relationships. And by prey, I simply mean, oh yeah, here's a Chase card for 22% interest. Use it, whatever, do it, and we'll measure your behavior, this, that, and the other. But to get a prime plus one business line of credit or business loan, you got to prove up. But they will give those to you for the rest of your life. Look at you. You've got 8 of them already. See what I'm saying? And forgive me, but you've stumbled into the process. Imagine if you were literally hitting. There's a thing called the 1-2-4-7 model. There are things you could do right now that are going to augment every single one of those, that relationship, and expand it to other banks.
Yeah, this is perfect, guys. We're gonna put the link in the show notes so you guys can go to the boot camp if you want, because I am going, because I'm going to do this to the best of my ability with the right coaching, and it just makes sense. Now's the time for me to really grow. I'm not getting any younger. I gotta leverage. I got things to do.
Be credit elder.
Yeah, it's all about anything in real estate. It's all about leverage. And do
you want me to say the boot camp? It's super simple, guys. GetFundableBootcamp.com.
There you go.
Bootcamp.com. And the next dates are always there. So since this is the podcast, you might be listening it 2 years from now. We'll still be doing them. So go to GetFundableBootcamp.com and it'll show you the next dates.
That's so awesome. Well, I really appreciate the time. We got to have you back on, and we'll talk about as I go to the next boot camp. Then I'll have more like real world experience in what I've learned, and we can kind of dive into that some more. And
love it.
And then just, I'm gonna have there's like these affiliate marketers, and they put their sales, like this one guy, Pat Flynn, he made like 180,000. He's a good marketer anyways. Smartpassiveincome.com, I think is, but he like always shows what he makes. You like his monthly earnings.
Credit lines.
Yeah, I'm gonna just do the credit lines. Yeah, it's gonna be my credit lines. Like, yeah, okay, we start with like this, and that's exciting. Well, thank you so much, guys. I hope you enjoyed this. Like, there's a lot to it, but I think if you go to the boot camp, it'll be simplified, and we just follow the recipe. Just follow the recipe, and you'll slowly but surely, and maybe some of you might have a little bit better profile to begin with. You might get faster results, because there's different things. Probably they look at your profile right now, and you might not have that much established credit versus somebody that's like me, who's got a decent amount of credit. I might be able to get bigger, but it's a progression. I've worked at this, although blindly, obviously, and now I'll have a roadmap to really. And I buy houses in the Midwest, so I can just take a credit card and swipe on them. So
seriously, buy it with a card or line or loan, right?
Yeah, there you go. It's exciting. It's very good. Well, guys, please like and subscribe. I'm bringing you the best of the best to talk about topics that can help you in your business. So hope you enjoy it. We'll see you on the next episode.